Hello there, traders, and welcome to this of the next Admirals webinar series, where we're here to talk about personal reflections on 9/11 and the effect it's had on markets. Really appreciate you joining us for this particular webinar, quite pertinent based upon the time of year that we find ourselves doing this. If you're watching this on YouTube, I hope you found it useful, interesting. Be sure to subscribe to the Admirals channel and make sure you give us a like if you found this interesting. Or if not, if you haven't helped, that's fine. You know, that's it. We appreciate all the feedback. Maybe you've got your own thoughts or your own comments. Be sure to put them in, and we'll be very happy to take them on. So if you just bear with me, what I'll do is I'll bring up the slides and we'll crack on, ladies and gentlemen. So I'll just bring up my slides here for us. Hopefully we can just, here we go. We can just, that should hopefully, he says. Bang. Super. Super. So I hope you can see me. I hope you can hear my voice. I hope you can see the slides. As I said, we're going to talk about 20 years on from 9/11, and it's going to be personal reflections on markets. And in a few slides' time, I'll give you a little bit of a hint of why that is important to me, you know, why actually it's even relevant for me to be able to give commentary on that. But I'm sure for those of you who are joining us, many of you who are perhaps a certain age, like myself, okay, well then, you know, you will be very, very vivid memories of not only what happened on 9/11, but also, you know, in the 20 years we've seen since. I'm not here to go through any kind of a moral or ethical sort of talks about, you know, what happened or what we've seen occurred. I'm just looking through this through a very narrow prism, a very narrow, perhaps shallow prism of looking at it as a trader through markets and how have they, you know, how have they changed? How were they impacted? And what can we learn? Okay, even today, new traders coming into the market. What can we learn from that? Okay, there's little hints, little tips, little ideas that you can take away and build into your own kind of trading plan. So, of course, here we are with Admirals, okay, a global brokerage with local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you to engage with markets on both the MT4 and MT5 and Admiral Supreme Edition. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help. And as always, now we have to make you aware of, you know, many of the new exciting products that Admirals are bringing to markets, one of which is copy trading. Perhaps you're a successful trader and you want to build a trading business and be able to offer your signals, or perhaps, you know, you're just a very, very busy person, okay, and doesn't have the time to commit and dedicate to trading full time, but would still like to be able to take the opportunity to sort of follow the trades of successful professional traders. Once again, if you have any questions, get in touch with your account representative and they'll be very happy to help you. And for those of you who are social media savvy, you can also join us and follow us on Instagram now. Okay, at Admirals Global is our name there. So be sure to sort of check us out. Make sure you follow us, and you'll be able to see all of the great feed that the content team put out for you there at Admirals. So, what are we going to talk about today? Well, you know, here we are, you know, the sort of 20-year anniversary of the events of 9/11. I'm going to talk about that, but also from a financial markets perspective, a little bit of a history lesson, but equally with some very valid points. Talk about personal insight into trading some of the events that have followed that came from that. We'll look a little bit at how markets have changed since then, and we'll have a little talk at the end about who have been the winners and losers and what can we learn from that, because there is always something we can learn from these things, okay? You know, there may be, you know, might be different styles of trading going on these days, but you can still learn from some of these fantastic, you know, events from past history in terms of, you know, as a trader, what can you do to basically improve and understand your knowledge of financial markets and also trading. So for those who don't know me, my name's Paul. You know, my background was in air defense as for the Air Force, okay, which has an implication on today's topic. But I've traded for many, many years, okay. I primarily focus on FX indices and commodities for my own trading. I look to basically be a trend trader for my sort of swing and longer term trades. And I'm very much a kind of a reversal and mean reversion trader for shorter term time frame intraday trading. So let's cut to the chase, shall we, and talk about our main topic, 20 years on from 9/11, personal reflections on markets since then. Listen, you know, I don't really need to stress it too much, but those events of 9/11 were a terrible experience. And for many people, not only in New York and the United States, but around the world, we all saw that happening pretty much in real time. And we know that, the world is always changing. However, it might be said that that change was accelerated by the events of that day. And 20 years on, we are still living with some of the the sort of repercussions and consequences because of that. Today, as we pass the 20-year anniversary, we're going to take a look back and reflect upon what we've learned in respect of financial markets that we can use tomorrow in our own trading. As I said, there is always something we can learn, okay? As traders, you're never done learning, okay? The moment you think you know it all about markets is normally the moment you're just about to take a little bit of a slap in the chops, as we might say here in the UK. There's always something we can learn. There's always might be just one little tidbit that you can take away and add to your own kind of your mental armory, okay, in terms of understanding trading, understanding markets, and understanding human reaction to events. And that might well be the learning point for some of the events I'm going to talk about here today. As I said, we're not really going to go through the kind of moral and ethical implications. Invariably, these were terrible events. What we're looking at is, how did markets react? Okay, what happened that we could learn from as traders? So, I'm sure pretty much most of you, will be aware of the events of 9/11, but I appreciate that really, we always have a wide range of experience of people joining our events. I also recognize we have a truly global audience that join our events, all right? And, I recognize that. And I appreciate, as I said, if you're of a certain age, 9/11 would be invariably much more, let's say, poignant to ourselves because, you've lived through it, you're an adult and you've seen actually what happened. I also recognize that, if you're a young trader in your early 20s, it really, you've never known any difference. That life, this world we live in is, what you accept as normal. And so, your perspective is going to be different from my own. So, I say just caveat that I'll, talk about my own personal reflections, but hopefully there'll still be elements that you can learn from yourself. So, as a very brief overview, on Tuesday, September 11th, 2001, there were a series of attacks against the United States, which variably involved 4 commercial airliners were hijacked. 2 aircraft attacked the Twin Towers of the World Trade Center in New York. 3rd aircraft attacked the Pentagon, which is the head of the US military, and the 4th aircraft crashed after passengers kind of seized back control of the aircraft from the hijackers. What we saw was pretty much immediately airspace in the US and Canada was closed for several days. Okay, some of you might remember, literally aircraft were landing wherever they possibly could. People were, their flights were just sort of kind of grounded, and people were just basically stuck where they were. What was interesting and useful and important to us as traders is that Wall Street trading pretty much straight away and was halted, okay, for about a week, okay, until September 17th. And what that led to, okay, which is what we're going to look at with the charts, that led to, it was a major player in terms of the start of a global economic recession that occurred for a few years. But it wasn't, I don't believe it was necessarily the complete catalyst. I think that had happened already, which we will see on the charts. And what it did is it led to what the US named their war on terror, which we have all been living with for the last 20 years, rightly or wrongly. So that was only a little bit about actually what particularly happened. Why is it relevant to me? Why do I get to actually say something about this? What do I bring to this? Well, actually 1 month before the attacks in about August 2001, I had actually been at the World Trade Center. I'd actually attended a summer ball at what was called, I think it was the Windows on the World, which was the top 2 flowers of the North Tower of the World Trade Center. That was me arriving in my limo at the start of the evening, and perhaps a little bit later at the end of the evening. And actually, the event of 9/11, I actually had returned from the US that day. I'd actually sort of flown out. I'd been in Chicago for the weekend, okay, visiting friends, and was actually returning home on the 9/11, and actually literally had just got home off the airplane to see the events occur, and then the airspace was closed down. So kind of, one of the last couple of flights out of America before it closed down for a few days in that sense. And of course, as an ex-Air Force air defender, I was supremely fascinated by what had actually occurred and how the Americans responded. And actually, I was on a little bit of hiatus from my own trading, more of which later. I'd traded quite a bit up, or I'd started my trading journey during the dot-com boom of the year or two before. I've been waiting to see what had happened, which I'll show in a moment. And then actually, this was actually one of the events that actually brought me back to trading and generating, in terms of generating a plan to basically be full-time and end up working for funds. So it did have a huge impact on my life. And also, as I said, because I was actually out in the World Trade Center about a month before, to see that, see that occurring and happening was quite a startling event for myself at the time. So here is a chart of the S&P 500 futures. It's a monthly chart, so every candle at the end of the month, okay? And just to give us the big picture, right? The big overview of what actually occurred. So let's get up the old drawing tool here, just to always help to annotate. So hopefully you can see that. So, as I said, this is a monthly chart, okay, from 1999 up to about 2009. So it's about a 10-year period, okay? But what will actually happen is, as I said earlier, is that many people said that this was the start of kind of a global recession. But let's have a look at the chart and sort of see what actually happened. What I'm actually pointing at here is, hopefully you can see here, as I always say, I'm a better trader than I am an artist. So please excuse my drawing skills, okay? But what we're looking at is that is the month of September 2001, okay? And as you can see there, price did collapse during that month, okay? But actually it was bought back up, and actually we saw for the next few months was actually price sort of tried to rally. It tried to rally, okay, and we're going to come back to that in a moment. But my view was that actually we were already in a bit of a recession. We had already turned the corner. This was the dot-com boom, okay? This is where I'd started trading, okay? And I sort of finished up here about sort of February sort of 2000-ish. And invariably what we saw was that price put in a monthly double top there, and then you can see price had already dropped considerably. Price had already come off, for the kind of the previous 18 months or so. Price had been, as you can see, already in a significant downtrend. What we happened here was September, and then over the next couple of months we had the initial invasion of Afghanistan, which was around about October-ish, November time of 2001. Price actually rallied, but then as what for those of us who lived it or remembered it, the kind of attention swang from Afghanistan to Iraq, and invariably the thought that there would be an invasion there, and that, along with other elements, had an impact on driving the price lower on the S&P. And that is, this was, as I say, it was a contributory factor. But my view is that the market had already started to sell off, and it was as we ran in here to the start of 2003, where you effectively got kind of a triple bottom, head and shoulders, double bottom, depending on how you'd like to. It was markets continued to run down from like 2001 into sort of early 2003, and then we had the sort of what we would term here as the second Gulf War, and actually you can see that that's what turned around. That's what turned around the trend of the market, and it ran its way up there up until 2007, 2008. There was a very nice, for those of you who've joined us, a very nice bearish key reversal engulfing candle there that kind of signaled the party was coming to an end. So, as I said, if you're a trader like me, you always love looking at charts. I always find them fascinating. I was, really, just intrigued by the price action, see how markets responded. Okay, how did humans respond? My view is that charts are a reflection of human psychology. Okay, the price is the price, and I find that fascinating. I can happily look at charts all day. But as I said there, I think that we were already on a downtrend. Okay. Price tried to rally a little bit actually off the lows of it, more of which later before it fell down. And it was actually not until the sort of actually the start and maybe the successful completion of let's say the kinetic phase of the first stage of the kinetic phase of the invasion of Iraq that basically that started to turn around markets. But more of that later, ladies and gentlemen. So, as I said, I actually wasn't really trading around 9/11 at that particular period much. I was actually in a just standard corporate job in London, and invariably, actually, the Air Force invited me to go back into the Air Force for what was about to come, and I decided not to. I thought that it would be a bit of a mess, and 20 years later, I'll let you draw your own conclusions from that. But what we had was move on 18 months, and then we had into the end of the Second Gulf War, okay, which kicked off around sort of March time of 2003. At which time, it was important to me because I was living in London at that time. I had actually started to sort of go back into trading myself. My best friends in the Air Force were on one of the leading squadrons involved, and actually, I had seen the markets decline as we've just looked at. And it's an element of a learning point is that markets hate uncertainty, and as there was the kind of the sort of the beating of the drums, with the Americans drumming for a war in Iraq, okay, that led to uncertainty in markets, and markets didn't like it. And actually, it's when the war started that's when the market ended. There was certainty, horrific certainty, but there was certainty. And at that time, I bought the FTSE itself. I just, I had a sort of a buy of the FTSE 100. I also bought a company called Taser. Taser make I think what they're called non-lethal weapons. Undoubtedly, you've seen police forces use them, but actually there was footage of American special forces using Taser, and I thought that was fascinating because what I saw and what I thought was, what American special forces will use today, other armies and police will use tomorrow. I should buy that company, and so I did. I also bought another company, which company in the days called Chemring, and invariably what they created is they created defensive subsystems for mostly for military aircraft, but also for other vehicles. So you switch on the TV and constantly see media images of helicopters or aircraft flying over, pumping out chaff and flares to decoy enemy surface-to-air missile systems. And so invariably the militaries were using up their stocks of defensive subsystems. So I bought Chemring, and it worked very, very well. I also eventually looked to buy oil itself, as I felt that once we'd got into the start of that that would have a little bit of a spike in oil prices, and that's what occurred, and we actually had a really start of a new bumper trend, which we'll look at in a moment. So the kind of learning point there is that there will always be opportunities around for you, okay, even in the most, let's say most extreme of events. And that is a question for yourself to have a sit down and chat with yourself about, okay, look yourself in the mirror about how you're going to engage with trading. Some people would not like to particularly, trade through events like that. Other people will. That's a personal choice. I don't believe there's any right or wrong. It's a personal choice based upon your own morals, your own ethics, your own values, and you can work with that. And we're going to touch on a little bit more later. So here's oil from the time. Just what we had was it's kind of interesting because we had a little bit of oil had basically after 9/11 had effectively, as you can see there, it drifted down. It was running around about $20 odd a barrel at one point. It basically it ran up a little bit as we ran towards the thought of going war, dropped off a bit, and then I think I bought when they came back in above $30. Okay. And for those of you who remember, what we saw was really the start of a trend from being at $30. Okay, what we saw is, oil ran over the next couple of years into an absolute super trend, okay, and invariably it basically ran all the way up to, I think it was about $148 at the time, okay. As you can see for yourself there, it went from like $30 to $148. I wasn't in there all the way through that. I took, as a swing trader, I took a nice few bits of profits, but I did not in any way envisage price going that way. It did. I doubt many people would have. But it's an interesting point. From that kind of 2003 up to 2008. Okay, we had price just absolutely rise on oil. Okay, and it was finished. We can see there in a monthly by a big bearish engulfing candle right into sort of 2008, where price then dropped from $148 back down to around about $40. So there was just absolute volatility there in the markets. You can read quite a few. There's I think one or two books about the kind of main traders who traded through that. Things the likes the Paulson who traded both the property and also Soros traded through the oil. Okay, and it was just as I said. You can look at a chart and it's just a fascinating insight that as to how the world changed. Okay, and of course with that company, okay, with oil prices rising as it did, what we saw was a few oil infrastructure companies, and one or two in particular, rise very, very well off the back of that. So, which I think might be my next chart. Yes, here is the next chart. This is a chart of Halliburton. Okay, I don't claim to be a commodities or an oil specialist. I'm a trader looking at charts, but back in those, let's say those early noughties, you would not have been unaware of Halliburton. Okay, Halliburton were a company where the U.S. Secretary of State Dick Cheney had a particular position holding. I think he might have even been on the board. I may have that element particularly wrong, but he was very much involved in Halliburton, and invariably they did very, very well out of the effectively those war in the Middle East, and also the sort of kind of the volatility that came into oil prices, as we just saw. If we look at their Halliburton, their monthly chart again, what we actually saw was that it was sort of trading around about $10-12, okay, in 2001. It drifted down, as you can see yourself there, okay, and then invariably we had this double bottom here, and then we just rose up there, okay, from trading down to around about 8. We traded from 8 all the way up to 50, and then basically that what we saw there is in sort of 2008, okay, summer 2000, about July. What happened is that party was ended. You can see for yourself there was a big bearish key reversal, okay, big bearish engulfing candle. If you're not sure what those particular candles are, then go in to look at the webinar archive. You'll find that there's a vast array of videos and webinars from myself and my colleagues, Marks and Jens. And I know I've done ones on particular price action patterns like engulfing candles and key reversals, and that was there. And that was, I can remember that was a very, as what we started seeing, what we had was not only did we have the crash, but we also had the US elections coming through, and it was starting to become evident that Mr. Bush was not going to win, and it was likely to be Mr. Obama that would win the election. Mr. Bush was a Texas oil man, okay. Cheney was part of his administration. The vast majority of his administration were oil people of one sort or another. So invariably the markets were reflecting on how, not only was the world economy about to collapsing, but also there was going to be a change in terms of, the administration. And so invariably what we saw there was, the end of that party pretty rapidly, and price basically having rallied up to about $54, $55, it rolled over back down to around about $15 very, very rapidly after that election. So you can see that, you can see the impact, okay, of, governments, the impact of, domestic policy, foreign policy, and actually also seeing, major players and how they can influence the markets, okay. And as I said, once again, that is, that's a particular choice for you to have a little look at, okay, in terms of, would you have been involved? Would you have traded that, okay? Would that have been something that you would have considered a sensible or, an ethical investment? That is a conversation, that's a bigger debate and one for you to have yourself when you look yourself in the mirror. But here I am just showing you, excuse me, what an interesting time it was, okay, in markets. What an interesting time and how markets responded, okay. And, and then there was, as I said, there were always little learning points that can come from that, which you can build into your own knowledge and understanding of markets. So let's move on a couple more years now from the Iraq War, and what we're here is into July 2005, and what we had here certainly in the UK, in London, where I was living at the time. July 7th, we had the sort of major bombings there, okay, that happened. I remember the day very, very well. I was actually trading that morning, and then the FTSE absolutely collapsed, and I started getting phone calls from like family, from friends, saying, "Put on the TV, are you okay? Okay." But I actually remember it. I had my mother staying. Okay, she's an ex-nurse, and as I switched on, we could see what was happening, what was unfolding. We could see it in the markets as well. And actually, my mother and I offered to go to accident and emergency to try and help out, because there was such a surge of terrible injuries from the terrible event. And it was really about a series of attacks across London's transport networks, on the tubes, on the buses. Okay, a terrible day, a horrific day. And what the case is, how did it affect UK markets? Okay. And this is where I certainly noticed a bit of a change. All right. This is where I noticed a bit of a change. And, and I can say I was a little bit part of that in a minute, sliver of a way. And what I mean by that is, I bought the FTSE that morning. Okay. It was trading down to about 5,020. Okay, I'm a very rules-based trader for my intraday trading, and actually I broke most of my own rules that morning, because there was a little bit of a surge of anger and frustration. And what you realize is that only those terrorist attacks, is that actually they are looking at trying to change the way of life that that we have experienced here in the West, whether you like it, whether you love it or you loathe it. Okay. we live in a free market democracy, and part of that is the ability of free markets to basically to operate. And so I just bought the FTSE with a spread bet that morning, okay, and then actually took out, so I basically left. I think price dropped beneath 5,000 that day, and it was a good 15, 16 years ago. But price actually, it did. I think on the bottom left I've got the kind of intraday trading from the day. Price actually did drop down in the morning, but then actually it rallied in the afternoon. Price rallied in the afternoon. Now, whether that was by purpose, whether that was by government institutions stepping in to support markets, or whether that was just people like me who just basically stepped in and bought markets because it was invariably our own way of basically trying to strike back, our own particular way of kind of exercising our own impotence at being able to help in such events. But what happened was the market didn't collapse. It went down in the morning, but actually it reversed. And I think by the end of the week, it had actually rallied and closed higher. And if we look at the bigger chart here, which is the FTSE 100 index futures, okay, on the monthly chart, what I've got here is, that was actually, sorry, let's get the old tool out here. This was actually the July 2005 candle. Price did drop down, okay, at the start when the event happened, but by the end of the week, by the end of the month, it was actually, okay, a strong bullish candle. The price was the highest it had been for maybe 2 years, over 2 years, okay, markets have changed, okay, and reactions to markets have changed, and that is a learning point, okay, is that the kind of, I think it's fair to say that the 9/11 events were, a black swan event, okay, and, very few people would have expected them to have occurred, came out of left field. It was a bit of a shock to everybody, pretty much most people. But by a couple of years later, human psychology, the human psyche, the markets had adapted, okay, to these changes, and instead of markets going, into a bit of a tizzy and actually collapsing, quite the opposite happened. It was almost as if human beings, people, institutions were stepping in and supporting markets in that. And actually, what you can see is, as I said, that was the actual when the events happened in 2005. But markets, rallied there again, up until mid 2007. They rallied for the next couple of years, okay, until it double topped as we ran into, as you can see there, as we ran into the start of the great financial crash in 2008, 2009. So, it was a fascinating time, okay, terrible, horrific event, okay, but it's us to look at, through this narrow prism of, well, how did markets react? What can we learn from that, okay? How does that question us, okay, when you're sat at home watching this, how does it question you? It's a question for you to talk about, well, how would you react? Okay, how would you react in future? Because unfortunately, I suspect these events will occur again. How would you react in the future? Okay, what would be your particular, your particular response? Is it part of your trading plan? Do you actually have a little paragraph in your trading plan based upon how you respond in particularly, okay, dramatic events like that? Might be something just to sort of take a moment to reflect upon and consider and build into your own particular plan. So, let's move on, nearly 10 years now, okay, although those events happened, we had the GFC, which is, that is a topic all on its own. In 2015, we had horrific attacks in Paris, and in particular in the Bataclan Theatre. It occurred on the Friday evening, right, November 13th, 2015. And this is what starts to make it interesting as we look through this, this narrow prism of traders looking at how it affected markets. It was a terrible event, horrific event, okay, we can all recognize that, we can read about it. Many of you will have remembered it. And we want to look at, well, how did the markets react to this, and and what was my own response? Because once again, it's something that I particularly traded through, and it's something that I particularly enjoyed, in terms of seeing once again how markets reacted, okay. And what we saw was that the event happened on the Friday evening, and it started to have the French market was already closed, the American markets were still open, and then we started to see a tick down in the electronic contract and the US contract. On the Monday morning, markets did gap down, okay, they did gap down initially, but what happened is the price reversed once again, a bit like attacks in London. People stepped in, they started buying the market I think it's by the Tuesday, the market had basically, it had closed the gap. It had basically, it recovered its lows, and I think it finished the week positively. And once again, actually went on, for that month to be positive. Once again, a terrible event had happened, but people had stepped in, support the market, and made a decision to basically support the kind of free market democracy that we particularly live in. And that's it's another interesting learning point to see how markets reacted, now how we as humans reacted to that particular event. So, where are we now? What's the story? Well, of course, you will not have missed the media coverage over the last month or so about the Americans leaving Afghanistan and the way that they have done that. And you can draw your own conclusions. Okay, I'll leave you to draw your own conclusions about the right or the wrong, etc. of that. It's outside the remit of here. But what we can't shake is this kind of knowledge, is the facts, is the data, the details that we've seen come out of it. They've spent between $2 to $3 trillion over the last 20 years, okay, in basically funding that war on terror, right? It depends on who you take your numbers from, 2 trillion, 3 trillion, what's a trillion between friends, etc. And what's happened is, of course, that money has flooded into markets, okay, flooded into certain companies. And for example, even in Afghanistan, the Americans are reported to have left over $85 billion worth of equipment there. Was that by accident? Is that part of a bigger geopolitical play? Who knows? Okay, but you just think that is a staggering amount of resource, okay, that was spent, staggering amount of equipment that has been left there, and this links into the kind of repercussions that we will see over the next couple of years because of this event. Okay, there will be repercussions. There will be a redrawing of certain, let's say, certain geopolitical alliances. We've already started to see that. Okay, we've seen that with the AUKUS, pact between Australia, the UK, and the US will come. That was actually going to have an impact, and we will look at that, maybe in a future session. But what I'd like you to remember is this, and this is an important point to be able to take away, is that since 9/11, in those 20 years, despite the volatility, despite the war, despite the great financial crash, despite all the Brexits, despite other events, other major events that have occurred, the Dow is still up approximately 4 times what it was back in September 2001. The S&P is over, it's actually probably nearer 4.5 times, okay, what it was 20 years ago. And the NASDAQ, the sort of, let's say, the tech-focused stock market there, that is up over tenfold in that 20 years. So despite all the events that have occurred, markets have continued to rise, markets have continued to move forward, markets have continued, all right, to do what they are there to actually do. And that's a fascinating insight in terms of, you might say that in many ways, the Americans, in terms of their let's say their kinetic boots on the ground, that is going to be left to historians to sort of work out whether that was a success or a failure. But if you look at it from the markets, okay, despite that volatile 20 years, markets have advanced. Okay, yes, there have been some really big moves down. There's been 1 or 2 major crashes that have occurred. But equally, markets have still rebounded. Markets have still come back. Okay, there is still that optimism. Okay, and that's something to take on board. Okay, as we enter what will probably undoubtedly be another volatile 20 years, but for very different reasons. And with that, as I said, there have been some companies who've done very, very well. So let's have a particular look at them, and it shouldn't really come as a particular shock to see that a lot of that over that 20 years did very well in the aerospace and defense sector. Not unsurprisingly, war on terror is good for those kind of companies. Once again, I leave it to you to sort of make a decision upon whether that is a company you wish to trade or wish to invest in. It's a real case of I'm a personal believer in freedom of personal choice. Some people would not like to do that. Others would. As I say, that's your particular personal choice. This is Lockheed Martin, a big major American defense company. And you can see where they were trading there around about 2001. Okay, trading around about $40 odd. And we've gone from $40 up to, I think it was about 484, yeah, up to, really, as you can see over the last few years, it's just been effectively, almost like a tenfold increase there, over a tenfold, sort of 11, 12-fold increase there over the last 20 years in that, okay? So it's, they have done very, very well out of that. Will that continue forward? We shall wait and see. We'll learn from that, I think, over the next year or two. There's also a company called Raytheon. You may have heard of them, you may not be aware of them. Raytheon, one of their products is Patriot missile systems, okay, Patriot missile batteries, and amongst many other things, but that's probably the most one, let's say a visual that people would maybe understand or recognize. But once again, if you look at the blue arrow, okay, where they were trading in September 2001, okay, they were down trading, around about sort of $15, $14. And we can see that they've actually been up to around about $94 there over the 20 years. Okay, and you can see for yourself, even with some major moves against, it has actually it's moved up there quite significantly. And what's of interest to me is that we can see that there was actually it dropped further on the kind of, let's say, the COVID crash, but actually it is, whilst it hasn't come back to high numbers, it has actually mostly recovered. Okay, and you'd be watching that, okay, to see how that plays out over the next few particular weeks and months. We've also seen Boeing, okay, Boeing, another big American aerospace and defense company. You can see where it was trading, okay, in 2001, all right, it's back down there, okay, around about, I think it's about $30 odd dollars, okay, $30 odd dollars. And we have seen it go as high as above, about $450 there, okay. Now, you can see that was quite some climb, but also we've seen quite some failure there. And this is kind of probably an interesting topic in terms of that failure was brought about, actually more for the civil side in terms of the failure. We had crashes with the 737 MAX, and invariably the way the company, not only were the crashes, just because due to problems with the product, with the actual aircraft, but also the way Boeing responded to that, okay, which, I think what we'll find is, that's going to be a case study in their people's MBA textbooks in terms of how not to deal with it. And that might be a deeper, longer conversation about, unintended consequences of the 20 years of war on terror, and that these aerospace and defense companies became, quite complacent, all right, because the going was good. And in fact, invariably, as going was good, people get greedy, people start cutting corners, when people get complacent, people make, mistakes, people make poor choices, poor decisions. And then invariably what happens is, that comes back to haunt them, okay? That hubris comes back to haunt them. We see it in individuals, we see it in politicians, we see it in traders, we see it in the markets, we see it in, companies like Boeing, okay? So it's, it's a interesting stock to have taken a look at. But I think they have fallen quite far, and will undoubtedly, I don't think they'll be racing back up to any new highs anytime soon. So in terms of learning points for ourselves, it's important to know the things like black swan events like 9/11. I believe they tend to occur more often than we realize, okay? We can model that data and put it out as a complete outlier, but the weird thing is these outliers very often happen more often than we expect. Important thing is that's why we always manage risk first and foremost, okay? Always focusing on managing risk first and foremost. What we have seen is that Western economies, markets, and sentiment, both, sentiment within the population, but also sentiment within markets, within traders, now tend to shrug off these terrorist attacks. And in fact, many of them will do the opposite. And it's a sign of them demonstrating their resilience and their steadfastness against this kind of external threat. What we can see and saw is markets still hate uncertainty, okay? Because humans hate uncertainty. I know that we operate in a world now where there are a huge amount of algos running markets, but those algos are still programmed by, for the most part, programmed by humans, and they are a reflection of heuristics of humans' biases, okay? And humans hate uncertainty. So we saw when we had, markets fell in the run up to the second Iraq war because markets were uncertain about what was going to happen. But actually, once that certainty occurred, and once the thing happened, well, then invariably what we started to see was actually a little bit of a boom. And despite all the terrible events in 9/11, as I've said, their markets have still moved and gained and risen, okay, during that time. As we said, just looking there at some of those aerospace and defense stocks and the overall American indexes. It is important to these things. Traders have to examine your own moral and ethical compass, and to make your decisions about whether this is something that you would particularly trade or whether it's something that you particularly, would refrain from. And I fully support people's ability to make their own choices. Okay, rightly or wrongly, they get to make their own choices. Because, well, as we have seen, where there are threats, there are always opportunities, and it's up to you to decide whether that's something you'd like to be taking part of. So in conclusion, ladies and gentlemen, we all know the terrible events of 9/11. They changed the world for most of us, okay, in the West and Middle East, and perhaps maybe you might say totally globally. And it has sparked 20 years of war, terrorist events that we've just talked through. But what we have seen is that markets have learned to adapt and resist such shocks, both populations and markets and traders themselves. They've ultimately proved to be resilient throughout this last 20 years of these terrible events. And as we've just said, where there have been threats, there have also been opportunities. And the choice is yours whether to embrace them. Not unsurprisingly, defense, aerospace, and infrastructure stocks have done well over these last 20 periods. And now what we're doing is we're about to enter a new chapter. And what that will bring is undoubtedly that will bring new threats, but that will also bring new opportunities. And, where everything happens in the world, there will always be opportunities. It's, your job as a trader to be able to position yourself to understand what's going on so that you are in a position to make educated choices and decisions for yourself to see whether it becomes a threat or whether you're able to turn it into an opportunity. So if you've got questions or thoughts about this, you can get in touch with us, okay, global@admiralmarkets.com on the email there. So there you go, ladies and gentlemen. I hope you found that useful. I hope you found that a little bit of insight. I appreciate that we are looking at, what have been quite dramatic and drastic and terrible events, but as I said at the start, this was all about a very narrow prism of looking at it as traders about the effect that it had on markets and actually what could we learn from that. Because it is it's a terrible thing to say. Unfortunately, we live in a world now where we will have such events, okay, and it's about being able to understand that and to make sure that traders, we are always managing risk, okay. You can never run away from risk. Your job as a trader is to embrace it and to manage it and to understand it and to recognize that it surrounds us constantly, and it's your job to be able to manage and operate when there are events like that, which unfortunately there have been, and undoubtedly there will be going forward. As always, I wish you the very best of success in your own trading, ladies and gentlemen, and I look forward to speaking to you soon on the next of the Admirals webinars. And until such time, trade well, ladies and gentlemen. Many thanks.